Okay, I promise you a very comprehensive and pretty quick analysis. This, I think, should be my best video I've ever done. I don't want to get ahead of myself. Not that that's setting the bar that high either, but this is Brian Lewis with MMT Investing, and things just changed. And this is brought to you by my Tarsier friend with his aviators and my rhino, my South African rhino, and my Filipino Tarsier. I've been traveling the world and I'm on lockdown here in South Africa, making some videos for you guys. So, this is the Nikkei. This is the Japan bubble. And this will be my third Japanification video, I guess. But I've just mentioned Japan in passing, and I mentioned this kind of shape where we kind of got this flatter top, and I talked about that a little bit before, but that's not what was happening in Japan. I actually set up my whole model, the entire model that I have on the S&P, if we can see over here. I have this entire model where we get the Volmageddon, the financial crisis, the Volcker, those long-term trend lines. We get these tangent lines. I set up the whole model on the Nikkei bubble, and it fits this bubble really, really well. And you can see what a sovereign debt bubble looks like and what the moves look like and how the Nikkei always smashes that like button. Where? Oh, it's over on this side. Right now to help me out with the YouTube algorithm. So so here's the Nikkei and here's our analog trend lines. So we get here. This is the super long term Nikkei trend line that sets up the whole Nikkei everything bubble. And then you get this double kind of bubble here that's like .com and financial crisis on the Nikkei, and this crash here is like the financial crisis. And then you get the steeper line here, which is like our financial crisis trend line that we have been looking at. And then if you zoom in up here, this is the Volmageddon bottom here, where we crash under the financial crisis trend line, and then we get a steep. Oh wait, I am sorry. That is the financial crisis line crossing the other one. Here's the crash that crossed it for the Volmageddon version. So okay, so we get ever steepening, ever steepening bull market lines as you go up the bubble. You get a really long bull market line, and then you get a steeper line that's shorter, and then a steeper line that's shorter, and it crashes across and then goes higher, crashes across and goes higher. And that's the same thing. That's the same thing that we have on here, where the Volmageddon line crashes below the financial crisis back where it bottoms, and then the financial crisis crashes back across the Volcker line. It's the same shapes of these lines on the S&P and the Nikkei. It does exactly that. And then where are we right now? We're underneath here. We're underneath this financial crisis trend line. We've broken two trend lines, and now we're coming up and we're testing this with a bull trap. So let's go and see where that is on the Nikkei bubble. And the timeline is very similar. So this is January out to April. So it's about a 4-month credit contraction cycle to get down here to the consolidation area, and that's pretty close to our timeline right now. And where we are now is we've just broken these two lines and we're just back testing this thing. And let me just go over the general shape of what has been happening in our everything bubble and in the Nikkei. And that is the general idea that you break a line and then you go and back test it with a bull trap. You break the line and then you go and back test it with a bull trap. And you can see you get a double top test. And then you usually get a dead cat above the break, and you usually get a immediate back test after the break, and then you swing out into your bull trap and you get this double top to test it. So if I go draw all of that type of action, and this is where we are under the financial crisis line right now on our chart, and I'll go draw that on the S&P. So here's the financial crisis line, and if we get that same activity, we do it pretty much the same way. we cross over, and then we break and immediately back test, and we get a dead cat, and then consolidation, right? And then we swing over into a bull trap with a double test, and then we start swinging down, and we get the dead cat, break, immediately back test, and then we consolidate down, and then we swing out into a double top test here, and then now we start heading for the Volcker line, and the same kind of pattern would just be a dead cat, and then break it, immediately backtest this line, and then you would swing out into a longer term bull trap kind of line where you would eventually double top test that. And that is the shape that I've kind of been talking about on my channel for a little while. Just kind of this dead cat and a break and a back test of the Volcker line. And we've been getting this bull activity that's been freaking everyone out, this super bull run here. And now we're up here, double topping and testing this thing. Let's see, where is it today? Yeah, we're all the way. We've been on this kind of I call it the out of bounds line, where we get this green bull trap support line here that we get our action on top of. But when we get off of the green line, we cross the green line here, and we get our reversal shape, and we cross the green line here, and we get a bunch of action on this blue line, sort of like a coil that reverses back up into the bull area. And then here we're getting this kind of action in between the green line and the blue line. That's sort of like that double top shape. That's sort of a reverse coil. And we'll see if this pattern repeats again. And it certainly did on the Nikkei. And then we can see, with a longer term look at the Nikkei, we can see a lot more things that are very interesting. So just this part here is our 3-month credit contraction cycle that I've been talking about in our S&P, where I'm just looking to get down to the bottom of the contraction. So I think we're going to get a bottom here. We're about halfway through, or maybe less than halfway through, our crash down to the bottom of just this contraction cycle off the top of the bubble. And then you get your expansion cycle here, which is sort of the longer term bull trap. And this would be the bull trap that runs out towards the presidential election. And I've heard people say that the Nikkei crashed, and then it just kind of trended sideways for a while, and that's not what happened. So here you get your 3-month cycle crash, and then here is your whole year long kind of cycle crash with the extra bull trap here. And that's where this cycle that winds down off the top of the bubble is undoing these long-term bull market lines. And once you finally get down here, you've unwound all those, and now you can continue with the market. And here's what the market looked like after the crash. So the crash, I mean, we did 27, and then we got down around 22 or 22. So the bottom of this main contraction got to around 20, and then as we go along the Nikkei, you can see we got to 17, or where are we? 15, 14, and then like 8,000. So we're at 8 here, and then we get down to 7 here. So this bottom here is sort of the mean reversion bottom of the Nikkei after you've wound all the way down off the bubble, and it got all the way down to around 7, and that is March of 09. So this is a long time. I mean, this goes from 1990 to the middle of 09. That's almost 20-year bear market that fell from somewhere in the 20 to 30 range down to 7. So like it fell from 25 to 7. So that's not kind of sideways. That is way down, bear market for 20 years after this initial blow off of the bubble. So that's just a look at sort of the backside of a sovereign debt bubble unwinding and how it looks going up the bubble, how you keep getting steeper bull market lines up, and then on the way down you break and backtest all of those bull market lines until you can get into kind of the unwinding part of the bubble. And then I mentioned that Japan has done a ridiculous amount of quantitative easing and of central bank intervention. And so if you look at the financial crisis, you see sort of a 3 month down like this. This is what you see in the financial crisis, or in the Great Depression. This part, you see a 3 month down that just looks like a straight line down, and then you see a bounce that's up. I think it's a little bit less than 50% on the Great Depression. But like that's all you see on the top of the Great Depression is just kind of a down and a bounce, 3 month down and like a 3 month bounce. And the Great Depression unwound all the way off the top in 3 years, and the Nikkei took 20 years to get down. So I don't know if that has everything to do with bank intervention or what decides the length of the bear market. But I've looked at a lot of bubbles and other videos, and somewhere in the 2 year to 20 year range, it just will wind all the way down off the bubble back to a mean reverted bottom. And that's just kind of the backside of a bubble. So if it winds down really fast, like the Great Depression, then you call it a depression. And if it winds down really slow over like 20 years, or like the bubble that happened in the middle of the Fed history took about, I think, about 10 years, and they call that like the stagflation period. And it looks like stagflation because the dollar was losing value as the stock market went down. But so nominally, the stock market looks like it was kind of going sideways. But if you inflation adjust it, you can see that it just went down over like 10 years. And that's just what the backside of a bubble does and how it looks. And I think this is a good comparison. And this is not financial advice, so I'm not recommending anyone make trades based on this Japan thing or my model of the S&P. But that's what I'm doing. And I'm short right now, and I'm not getting out of those shorts because of this little move right here today. I can tell you that much. And I am transferring more money over, and it's not going to get here in time for me to get short right now. I want to get more shorts, but um, yeah, okay. So that's I think that's sufficient for this one. I think I'll do less long-term videos like this, and I'm going to do some more checking out some individual sectors and stocks and some things like that over the next week or so. And we'll see what happens here, because this is super interesting action here. And we're just like running along this backtesting this vertical line, and we're breaking across. We're breaking across our tangent lines, and we're above this line again. So this is really interesting action. So there will be plenty of action and drama and people making big trades and freaking out over the next week. This week looks like it's going to be crazy. And it's also the big earnings week, so everybody is releasing all of their financial data, their earnings reports. A bunch of the big companies this week are going to be releasing that data, and we're going to get data about the loans from the banks, how many loans are available. They've downgraded a lot of the real estate loans now. You can't get loans for expensive houses anymore. So it's a very interesting contraction and a very interesting graph. And I can't believe the Nikkei sets up just like this, where the same model fits it and it shows the bubble. So I think this is probably going to be my premier video on my channel for until I make another one that I think would be the premiere, I guess. Okay, so that's plenty. And please hit the like button. And this is not investment advice. Happy trading and cheers.